we are now in 2020. We go 2 years back, 2018. My after-tax profits were 100,000. I was not asked, nor I did want to pay any dividends, so I had 100 worth of profits available for dividend distribution. 2 years down the line, I'm obliged to pay 17% on the 70% of this 100,000, which mathematically comes to 100,000 worth of profits multiplied by 70%, which is 70,000 worth of profits multiplied again by the applicable dividend tax, which is 17%. Point that we observe about taxes is the deemed dividend tax. For those of you who are Cyprus tax resident but non-domicile, or who do not, the shareholders that you receive dividends from Cyprus companies and you are not physically in Cyprus or you are not tax resident in Cyprus, you can ignore this point simply because you don't pay special defense tax. Special defense tax applies on dividend income for Cypriots, for Cyprus tax residents and domicile. The deemed dividend income, it's something that many businessmen want to abolish, want the income tax office to abolish, is the following tax. The tax regulation says that if, for instance, in 2018 audited financial statements and profits, you have not taken any dividends out of your company. So in 2018, you had your business, it was successful, and you were entitled, let's say, 100,000 worth of dividends, and you have chosen not to take any dividends, but the profits were 100,000 after tax. Our law states that after 2 years, you need to claim and pay the dividends on at least 70% of that amount. In other words, I have my audit and assurance firm, Cyprus Audit Services. In 2018, we've paid our corporation tax, and we have 100,000 worth of profits. And in 2018, I've decided not to take any dividends. It doesn't matter. In 2 years, I am obliged to pay on the 70,000, which is the 70%, the applicable dividend tax in 2 years down the line. In 2020, let's say now it's 2020 or 2021, I need to pay 17%. So, in my audited financial statements for 2020, my tax expert needs to account and will ask me to pay 17% multiplied by the 70,000 worth of profits going 2 years back. I know that it sounds a bit complicated, so I'm going to say it again simply. We are now in 2020. We go 2 years back, 2018. My after-tax profits were 100,000. I was not asked, nor I did want to pay any dividends, so I had 100 worth of profits available for dividend distribution. 2 years down the line, I'm obliged to pay 17% on the 70% of this 100,000, which mathematically comes to 100,000 worth of profits multiplied by 70%, which is 70,000 worth of profits multiplied again by the applicable dividend tax, which is 17%. So I'm getting penalized effectively for leaving money in my company and for not withdrawing dividends 2 years ago. This is something that is included in the tax. This is something that many professionals like myself want to abolish because the income tax office gets money from our earned income without us getting any dividends. Whether it's right or not, I'm not the one to judge. There are counter arguments and arguments for or against it. So pay attention, please. These are common tax mistakes that we do repeatedly.